subject.
Mortgages, interest rates.
Bills, cost of fuel.
I seem to do less exercise in the gym in the mornings and more talking about the world and the economy and interest rates and what I think is going to happen in the future. Don't finish that statement.
From what I hear though in the gym, from some trusted sources, I don't think there's much more talking you can do.
Do you know what? I do my stuff in there. I keep to myself.
You know what? Yeah. Three minutes and then 57 minutes of talking.
If you put your headphones in,
I can't talk. I don't even know. I've lost my sat nav. Can't get me to watch it.
If you put your headphones in, you block everything else up. That's the way I do it. But yesterday, I must have been very tired. Left my bloody headphones on one of the machines. Came home, opened up my thing last night to go recharge them. Where are they? Luckily enough, they are.
That's because you were talking. Probably.
I was actually talking.
I left. I put the air into my wife's tyres in my car. Left. You know, you take the little caps off. You left them on top of the blinking thing. I remember going there.
It wasn't even your car though. That was the worst thing, wasn't it?
No, I know, that was the worst thing. I'd taken all the little caps off to do the air and tyres, left them on top of the machine. But in fairness, I went back 2 hours later, they were there.
But do you know what? Go back to...
Not saying so with Nick, I guess.
To interest rates and all that. It is...
Popular subject.
A popular subject. And I think we've had, Brexit is the talk of the day. Then it was COVID. Then it was the Ukraine crisis. Now the next crisis is interest rates. And
right. I think the problem with interest rates, we've never had it so good because the interest rates came down from the credit crunch. I remember when the 2008 crash hit. I left a full-time job to become self-employed as a financial advisor and mortgage broker at the time, right in the middle of the crash. Could have been a worse time to go, really. But I committed to doing it. But my mortgage at that time, I was paying, I think, 5.5%, 6% on a variable mortgage. Because the interest was high, but then they can plummet it down, and I was paying next to nothing virtually. And it's been like that since 2008. So what are we talking?
14 years. And if a normal mortgage is 25 years,
a lot of people have
2/3 of it is at a low rate.
And they always used to say then was if you can average 5% over the term of your mortgage, you've done really well on a mortgage rate. And I think that's what we've got to bear in mind. Like we just had a very good run of low interest rates on everything. And yes, they're rocketing up at the moment, the cost of everything's going up, but it will settle down at some point. Because the lenders don't really know what they're doing either, because they're inundated with business, and the rates are kind of flying up.
And you can see that with the team next door in the office, that they get a deal today or they get a rate, and by 5 o'clock that evening, it's pulled. It's almost you might get a period of time before. Exactly. It's so changing now the environment on a daily basis.
It is. Like we were chatting about yesterday, we got some clients in London whereby actually the interest rate rise hasn't just affected what's they're going to pay a month if they get a mortgage. It's actually going to affect their affordability to get the mortgage, because as the interest rates go up, the stress testing within the background of the mortgage is saying that actually they can't borrow as much than what they originally were. And there's lots of kind of knock-on effects. But I think it's just something we've got to deal with. At the end of the day, if you need to buy a house, you need to buy a house, and you've just got to budget for what the mortgage amount is. I just think we just had it good for so long.
You do a lot more mortgage, and you're a lot better than that area than me. Do you think it's a reset? People, it's almost like when people are buying, when they're in a house and they bought it, my house has gone up in price, or gone in value, or it's gone down in value. It's irrelevant because you're living there. You don't need to sell it. It's fine. Do you think people were buying or overstretching when rates were low and all that? Will this almost bring people back to a level where they think it's affordable, or is this going to be something that's going to blow up? Or
I know there's a lot of talk of kind of repossessions, bankruptcies, and generally that's what we get the negative events world service and all the news. But I don't think so. At the end of the day, you look at like when we've the mortgages for clients. We know they can afford it if the interest rates go up. Lenders have stress tested if the interest rates go up. And I think the biggest panic is, and we did a video on this yesterday, is that people have this weird misconception that if interest rates double, your monthly payment's going to double.
Yeah.
But it's not actually true, because I think we did an example of, I think it was a £200,000 mortgage, and based on a 2% interest rate over 25 years was about £850-ish a month,
Yeah.
something like that. And I think, and if the interest rate doubles to 4%, it actually goes up £200 a month.
Yeah, 205, 207.
So it doesn't,
like that.
so it doesn't go to
1,600.
£1,700 a month. Now, don't get me wrong, the interest in the background has doubled. Okay, so if you were paying interest only, you would see your monthly payment double. But if you're on a capital repayment mortgage, your actual monthly payment doesn't go up that much.
Yeah, and there's a lot of scaremongering. You know, we've done social media posts the last day or two of those experts in the mortgage field out there are asking direct questions. Are you worried, or do you think your rates will rise? Well, it's instilling fear at the outset, and they're saying to people to come out of rates that is going to be incur penalties. They're going to look at getting into new rates, which are maybe higher than they are at the moment, that they've just come out of, to hopefully get away from potentially higher rates in the future, pay a fee for that, and then pay the mortgage advisor fee for doing that. So there's a lot of fear out there, and I put something out there. You're paying lots of money in fees and penalties, and the only person that's kind of benefiting at the moment is that mortgage advisor who's generating new work. So on some occasions, it might be beneficial for that person or that couple to do it, but it's going to be very rare where you're paying penalties to come out of something to pay more money per month to potentially cover a potential increase somewhere down the line. It's it's all it's and buts.
So I'm part of a Facebook group, which is a bit of a forum, I think, and someone put in there that they've had a client come to them who's effectively saying to them, I want to finish my mortgage early to lock into a higher rate now, because I'm worried they're going to go to, I think the figures were something like 15% or something like that, mortgage rates. They're not going to go that high. That's not going to happen, because that will cause some major problems. But they were coming out of a rate with a 1% figure in it to want to come out early now, paying something. I can't remember the exact figures, but something like £10,000 come out of the mortgage, plus other costs.
£1,000 set up
to lock into a 5-year fixed at a much higher rate. So instead of wearing it out for the next, like, I think they might have had 18 months left. I can't remember the exact figures, but that is just absolutely ludicrous, because we do not have a crystal ball. We do not. I can get the kind of panicking, but this advisor's in a little bit of a catch-22, because this person is just saying, that's what I want to do. And they're going to have to say to them, sorry, you're going to have to go find someone who's willing to do that.
And there will be loads based on what social media is turning up. But 10,000 for a penalty, potentially £1,000 for a new one.
Maybe you calculate the break-even point on that.
Many years down the line.
You might not even get
10,000 for a penalty fee, 1,000 for a new deal, maybe £1,000 for the mortgage person, £300 a month more over the next 60 months. So that's 60 times 200. That's £3,500. You're on a £15,000 fee at the moment. Now, even if your deal didn't go up in 2 years' time by 200 odd quid a month, like we said, it's going to be a long time before you get to that 15, 20,000. But the wording used and the way that people are asking questions at the moment, I think it's scaremongering, and we don't know what the future holds. So we're expecting that rates will go up, but at some stage they have to come down again, and you just have to wear that wave of optimism, pessimism, and just continue to do as you do, the normal behaviour. Just continue to pay off your mortgage when a deal expires, renew.
Yeah, there is a bit of a secret to how you can potentially get yourself the best rate available in the next 6 months.
Come to you.
Yeah, come to you. What I would firstly do is avoid the money supermarkets and all that rubbish, okay? Because I had clients send me some examples of deals the other day. Can we have this one? I found this on my supermarket. I look at it. No, you can't, because it's a nationwide mortgage. You're not with Nationwide. It's a retention deal only. Another one, which was this rate with Halifax is amazing. It's better than the other options. Yeah, but you're not a Halifax customer. So certain lenders have retention rate. So if you're a customer of Halifax, NatWest, or whatever like that, they will give you a retention rate. They don't generally publicise them, but they do on some of the kind of search engines. You can kind of see them. But what they don't show on Money Supermarket and all those weird and wonderful do-it-yourself sites is that they are retention deals, and you've got to be a member, or you might have to be a premier customer, or you might have to earn £100,000 a year to get the deal. It doesn't tell you any of that. Okay, so ignore those sites. They're absolute rubbish. Okay, and I'm going to say that because I know. Go and find a mortgage broker, okay, who will do the hard work for you. Okay, we've got a duty to find you the best rate that fits for you and your circumstances, and that's it. Okay, yeah, pay them a fee. If you don't pay them a fee, anyone who's doing anything for free, well, you get a free service. Okay, so pay them a fee. Okay. It's a professional service, and they will find you the best deal. Now, what you can do, there's some lenders out there where you can start the process 6 months out from when your rate is due to expire.
There's not going to be many of them, though, is there?
No, there's not a huge amount, but there are some. So you can start the process 6 months out, okay? But what you do then is you book your rate at that point. So for argument's sake, you might say the rate you got is 3.3%. Now, when you book that rate, you start the process. Now, for example, if you are with Halifax or a few others, you can't actually start, they won't give you the option to have a rate switch until between 3 and 4 months out, okay? So what I would usually suggest is, and it's a bit of work for the broker, and that's why you need to pay them a fee, is they'll apply for this 6 months out with another lender, book your rate. Then as we get close to the switching point and the point we can check, we will have a look to see whether actually it's a better deal to switch with your current lender or stay. Okay. And if it is better to switch with your current lender, that's what we'll do. But they'll keep running the other mortgage side by side right up until we go, well, actually, the switch rates are better or they're not so good. Okay. But that's the only way you can put yourself in a very strong position to get the best deal out there at the moment.
Two bites of the cherry.
Yeah, 2 bites of cherry. It's a lot more work for the advisor, and you might find some won't do it. Okay, but it's something we do here, and it's worth the consideration. If you are that worried about it, yeah, that is one of your options.
There's a lot of times where people contact us and they're, my friend or my neighbour has got this deal. And like you said, with the retention and the income that they're on and being a member of Nationwide or something, every mortgage is going to be bespoke to that person. So as you say, if you're paying a fee, the mortgage advisor will do the best in the interest of that person for them and get a bespoke thing. Whereas if you're not paying any fee, are they that interested? Are they going to do all the work? Are they going to do the 2 bites of the cherry for the person? It takes a lot of work. You're having to apply months out. You're having to put reminders in. Then you're having to do work 3 months out or something. Is anyone going to do any work for free?
It's a lot of work for free.
Absolutely.
Like the actual mortgage process and what the lenders require from you, the time, and what they actually pay you in a commission. So when a mortgage broker submits a mortgage to a lender, and some lenders we will get preferential rates for what you get going direct to them. Okay, that is one of the benefits as well. They will pay us what's called a procuration commission fee. Okay, that's the industry term for it. Yeah. Okay, and it's around about 0.3 to 0.4 of the mortgage amount. So it's actually not a lot of money. So if, for example, it's £100,000 mortgage, they'll pay you between £300–400. Now, it's a lot of work for that. It's not profitable unless you charge a fee. And we do run a professional service, okay? Because there's things like liaising with estate agents, liaising with solicitors, and for mortgage clients, everything is always very urgent. So you kind of want stuff done straight away. So yeah, you should pay. What I will say though, there are a few companies out there who charge these £2,000 lifetime mortgage advice fees.
Stay away.
Where they will con you into, and I'll use the word con, it's a strong word, but it's the truth. They'll con you into paying them £2,000, £3,000 up front. And usually you get to add that the mortgage rate doing a remortgage, which shouldn't really be allowed, to give you lifetime mortgage advice. Now, they're part of big national firms usually, whereby they all move around so much that if you pay that £2,000 2 years' time, there's a very good chance you'll never hear from that broker again. Okay? And you're not going to get this lifetime service. The amount of clients that come to me 2 years or 5 years down the line for me to do their mortgage when they paid this person a lifetime mortgage fee of £2,000, and they never hear from them again because they've either left the industry, gone to a new firm, or the firm they're with has gone through, okay, or has kind of disappeared. So it's absolute nonsense.
Yeah.
You know, I think if you're paying somewhere in the region of £500 for your advice, I think you're in a good place. It's kind of locally, I would say, the way we are. When you go to London, you're going to pay a bit more on some of the more kind of expensive areas. And you may pay a bit more if it's a more of a complex transaction like commercial or a limited company buy-to-let, or maybe if you've got some adverse credit. We don't deal in adverse credit because it's a specialist type of market. But I think for normal mortgage advice, expect to pay somewhere in the region of £500. And that's good value for what you're doing then, because it's a lot of work.
Yeah. People, do you know when we ask for documents, it's not us asking for ourselves. There is a list that we can put attached to this of what you should get, and maybe a folder of documents that you start preparing in advance of getting your mortgage. And if it's 3 months of bank statements, whatever it may be, and every time a month changes, change that bank statement out. But it's not us asking for the documents. The person that sits in an office that is using the term underwriting and checking, is it affordable? And when they lend, they ask for documents. And we don't get a chance to say, no, we're not going to give you that. If the person, you, wants to borrow that amount of money off that organization and they ask for this, this, and this, we have to give it to them. There's no point in saying, why do they want that? I don't have it. We give them what they want. Otherwise, they don't give us the money for you for your mortgage. It's that simple. Yeah. There's no point arguing with these people. There's no point saying, why do they want it? They want it because their spreadsheet or their tick box says they have to have it. And if they get something and they're not happy, they may come back for more information. And all we can do constantly is just go, hello, we need more. And this is why sometimes when G said about not paying a fee, you can go back and forth to a mortgage underwriter on many occasions, asking you for more documents, and it can be very time consuming. And sometimes you don't see it in the background, the team next door can be pulling their hair out because they are so slow at getting the information back to us, and they're constantly asking for stuff. So in advance, we kind of give people a list of, get all of these documents prepared in advance, give them to us, we'll certify them, we confirm they're all original, we start the process. And if we ask for more, get the bloody documents to us as soon as possible, because it impacts on a decision for you.
Yeah. And it just makes the whole process more slick for us as well. But we do have a mortgage course available, and we'll link to it in the notes for this this video podcast, whereby you can go and learn everything you need to know about mortgages. Even if you've had a mortgage before, but you just want to learn how things have kind of changed. It's in this £27, but actually you get a £150 voucher off our fees. So actually, you're getting my cash back in reality. So go and have a look, links to the bottom, but that will kind of help you on your journey, especially if you're buying your first house.
So don't listen to all the negativity that's going on in the world at the moment about coming out of good deals to go into worse deals because they're going to be better now than in the future. We have no idea what the future is going to hold. Who would have thought in 2019 all the stuff we've had since then of Brexit, COVID, Ukraine, and all of that? We don't know what the future is going to hold. We can live for today, and we'll worry about what rate we need to get tomorrow when the time comes.